Good morning, everyone. My name is Michael Steinmann. I'm President and CEO of Pan American Silver. It's a pleasure to be here with you this morning and giving you an update on a lot of advances, a lot of changes that we went through over the last year with Pan American after a transaction with Yamana Gold. A lot of integration work has happened, a lot of very positive advances, and I'm happy to introduce them to you in a short presentation. Please keep in mind that I will use forward-looking statement in my presentation. That's how the new Pan American looks now. We see here we are very diversified assets here that we're running, and there are 11 producing mines across the Americas, 2 operations in Timmins in Ontario, all the rest is in either Mexico or Central and South America. We're active in nearly every country in South America, and you see that on the pie graph, very important to us, the revenue per jurisdiction. That's a really great diversification, really a way for us to maintain or control country risks, and a great way to do that being active in so many countries. As I said, 11 producing mines, high quality assets with some of them very, very long life, a lot of exploration upside. We have 2 very large catalysts as well, and I will talk later about them. One is, of course, Escobal in Guatemala. I'm sure you heard about it before. And the other one is our large world-class discovery at the La Colorada Skarn, which is a large, very large polymetallic, very silver-rich deposit that we found below our La Colorada mine. And I will have some slides later on that one as well. We have the largest silver reserves and resources in the world, and since the Yamana transaction, also very large gold reserve. So lots of activity on the side of our portfolio last year. As I mentioned, at the end of March, we closed the Yamana transaction that added 4 assets to our portfolio. The biggest one, of course, the flagship Jacobina mine in Brazil, followed by El Peñón in Chile, Minera Florida in Chile as well, and then you see Cerro Moro very far south in Argentina and Patagonia. So those are the 4 assets that have been added. There was a very large or partial ownership, 56% of a very large copper porphyry called Mara in Argentina as well. It's not on the map anymore because we went very quickly to a process of portfolio optimization. And we announced in, I think in August or late July last year, 4 transactions for our portfolio optimization already. So we sold that 56% of the Mara deposit to Glencore. We sold a deposit or an exploration play in Chile to Rio Tinto. And we sold our former Morococha mine in Peru back to a Peruvian mining company. And we also sold quite a few of non-controlling and non-core investments that we had in different companies. All over, a very great transaction with that portfolio optimization. I think we netted about $593 million cash for those transactions. We also received 3 very high quality royalties with Glencore and Rio Tinto on copper and on gold. And we used that money to repay all our debt, short-term debt of just shy of $400 million. But let me just step into the year 2023 and then 2024, give you a bit more detail. It's just quickly a few of the highlights of 2023. Of course, that year only had the Yamana assets 9 months with us, so it's not a full year. 2024 will show some growth on production and, of course, on the revenue as well. But even without that, we had record revenue of $2.3 billion. You see our silver and gold production there, 20.4 million ounces of silver and 883,000 ounces of gold at attractive costs. We declared dividends throughout the year, in total 40 cents for the year. So just over $130 million of dividends that we paid out in 2023. I really like to look at our business when looking at cash flows. I think it's a very important metric to look at. It's often very difficult to compare costs, cash costs, and all-in sustaining costs from one company to another. There's different ways to account for. Some people put project capital or capital from the mine into project capital, kind of removing it with that way from the all-in sustaining costs. Of course, it still has to be paid somehow, and when you look at cash, you will see always the real picture. So when we look at 2023, as I said, a lot of movements that happened. We started the year with $142 million cash. You see that gray graph there on the left, $142 million start of the year. Strong just operating cash flow, $661 million. So that's really from our operation, just the whole year for Pan American assets and 9 months of the Yamana assets. Of course, we have to invest money in our business. So sustaining capital that you see there, the red bar, $289 million that went back into our business. Sustaining capital just to maintain our assets, underground development, stripping if it's an open pit, preparation of leach pads, etc., and of course exploration to replace the ounces that we mine. We have to pay taxes, of course. We're a profitable business, so we paid $150 million taxes. And as I mentioned before, we spent $130 million on dividends. And this really forms on the left side of that graph the operational year. So at the end of the year, the cash up from $142 million to $295 million. As I said, after spending the capital that we needed to maintain our operations and replace our reserves, after taxes and after dividend paid. And that's how I see our kind of stable day-to-day business, a very strong business. And you will notice that actually I include the dividend on the left side of this graph because I think it should be returned to the shareholder in form of dividend. In this case, should always be seen as part of our base business, something like taxes and sustaining capital. A return to our shareholders should always be on the left side of our graph. You probably noticed that we announced a share buyback as well to additionally return capital to our shareholders. We announced that just a month ago in February, and that will be in addition to the dividend. We still declared 10 cents dividend for the quarter. As I said, 40 cents that we declared last year for the full year. So when we go to the right side of that graph, you see the $295 million would have been the end of year cash balance if this would just have been a kind of a normal operational year. It wasn't. As I said, we disposed lots of assets. You see there $649 million that came back into our coffers from disposing those assets. And as I mentioned, we used that to repay $382 million debt. That was all our short-term debt. We have 2 bonds that we rolled over from the Yamana transaction, very attractive debt. The big one is $500 million at, I think it's at 2.5% interest. So very, very attractive debt. We spent some money on projects, $130 million. Large part of that went into La Colorada Skarn, and I will show you some slides later on what we did with that investment, because it's a great project. We spent $77 million on mine care and maintenance, and I think it's very important to understand that this included mostly the Moro project in Argentina and probably the Escobal mine in Guatemala. As we sold mid-year the Moro project, that care and maintenance, which was about $56 million per year, is obviously now gone. We don't have to spend that money. In addition, there was about $14 million on care and maintenance at our Moro mine that we sold last year as well. So about $70 million on savings on the care and maintenance cost for 2024. In addition, as we repaid those $382 million short-term debt, we saved about $20 to $25 million of interest on that debt as well. So we're about a $90 to $95 million savings between interest payments and care and maintenance savings because of those dispositions of assets. In addition, and you don't see that here as a special or separate graph, that the Yamana transaction obviously provided us with large synergies. We guided always somewhere like $40 to $60 million annual synergies, mostly on the G&A side. And I can tell you now, after a year, that we are at the high end of that range, probably somewhere even beyond a bit, the 60, somewhere between 60 and $70 million of synergies that we see and harvesting now year after year. Of course, there was some transaction costs in last year as well, but at the end of the day, we finished the year at a record cash holding on short-term investments of $441 million. As I said, record cash holding, and of course, one of the reasons why we have been able to return additional capital to our shareholders. When we look at 2024 guidance, as I said, we see an increase here in production. That's mostly coming from two sides. La Colorada, we had a lot of issues with the ventilation there over the last 2 years, and that project with the new ventilation shaft and ventilation system will be finalized mid of 2024. So La Colorada will increase production in the second half of the year. And when I talk about La Colorada, I'm talking about the top part, the top vein deposit, not the skarn. That's not ready for production yet at this point. And we see, of course, the impact of having the Yamana assets with us for a full year. You see that especially on the gold side, with a guidance of 880,000 to 1 million ounces of gold at attractive costs. Very strong financial position. You see there our total available liquidity, just about $1.2 billion. That includes, of course, our cash. It concludes our undrawn line of credit of $750 million. And you see there, and sorry, I think I said 2.5, it's 2.63% interest on the $500 million bond that we rolled over from Yamana, which is maturing in August 2031, so a very attractive debt. And then the smaller one is $283 million at 4.625%. Very attractive debt as well, of course, and that one is maturing in December 2027. So very strong financial position, very strong balance sheet that we have after the transaction, even stronger than before the transaction. Just a few words on La Colorada and the ventilation, and you see there the ventilation shaft. It's a 5.5 meter diameter concrete lined shaft. This is during construction, of course. The galloway that you still see in there for construction has been removed. We're waiting for the installation of two 1,000 horsepower fans for the top. And this shaft, 581 meter deep, will really provide the air exhaust for the mine. So really bringing us back to accessing the high grade ore to the northeast of the mine. So that shaft is at the very northeastern end of our veins. And as I said, everything should be working around mid this year, and then we'll slowly obviously have to increase some of the development, underground development, and then increase production back at La Colorada to more normal levels for the rest of the year and then going into 2025. But let's talk about the very exciting project of the Skarn. Of course, La Colorada itself, an exciting mine. It's our biggest silver producer, as I said, suffering on the ventilation side for the last 2 years. But with that shaft now, that should be behind us. But in 2018, we found through exploration, deeper exploration, the first hole of the Skarn, which is a very wide massive polymetallic ore body. Normally what we're mining on the top are about 2 to 3 meter wide veins. Now when you look at the skarn width of that ore body, I think the biggest intercepts were like in the 300 to 370 meter wide, so completely different size and scale. And after lots of drilling, I think we drilled so far about 280,000 meters. We came out with the first preliminary economic study, or PEA, just late December, somewhere around, I think it was 18th of December, showing a very large mining project would average about 17.2 million ounces of silver production a year, very large zinc production of 427,000 tons, plus 218,000 tons of lead. That's for the first 10 years as an average. The mine life is 17 years at the moment, still to grow, as we did not find the end yet of those ore bodies, and we are still drilling and have at the moment about 40,000 meters of results that are not even included yet in the resource that will come into our resource update mid of year. Very strong economics for this project. You see it there. Very exciting project for Pan American. A lot of value sitting there. And you see the capital cost of 2.8 billion. Of course, it's a very large project. We envision to mine this with sub-level caving method. Would look at about 50,000 tons per day underground mining. That compares to 2,200 tons that La Colorada normally mines from the narrow veins when it's back at full production. So very large mine, would be a very, very large underground operation. And from the first day on, we presented those results. I have been very clear that we will not do this alone. This is a very large project, especially on the base metal side. And we are looking to partner up on this project to advance this further. I think this is a very easy view of the project. This is a cross-section through the mountain. The green is kind of the surface. You see in gray colors the underground levels of the current La Colorada mine. So those are the narrow veins that we are mining right now. Very active mine in production for over 35 years. With us, probably about 25 years. But very, very productive silver mine. But as I said, narrow veins, about 2,200 tons a day. And then you see below those three very large ore bodies of the skarn. You see all the blue ramps and access and new additional ventilation shafts that we have to build for that project, which is deep-seated below the current mine. There's a lot of infrastructure, hence the large capital number of $2.8 billion. A very long life asset, as I said, at the moment 17 years. I think once we are over and done with the exploration and find the end of this ore bodies, we're probably somewhere looking way beyond 25 years, maybe 30 years of mine life or longer. So a very long life and exciting project for Pan American. And when you look at the size of it, this is data from S&P, but you look at a lot of the big zinc deposits in the world. At the moment, the biggest producer is Red Dog, followed by Rampura-Gucha, and the next one would be La Colorada Skarn. But when you look at the estimated mine life, and I know that mines, normally don't just shut down that quickly, and they will extend a few years, but you will see that around 2030, 2031, a lot of the really large zinc producer, and that includes Antamina, which deeper down will go into more copper. The zinc market will go through quite a change there, and La Colorada will be not only one, but probably the largest zinc producer in the world, as I said, with a very, very large silver production as well. And not only a very large production, but also very attractive cost curve. You see here, when we look at the cost curve, Rampura-Gucha now still the cheapest mine, of course, is an open pit. That will be mined out somewhere around 2030. but you see La Colorada Skarn clearly in the lowest quartile of costs when we look at the zinc cost curve here for the world. So, and a very exciting project for Pan American. As I said, we are looking for a partner here or partners right now. I got a lot of interest in that project, as you can imagine, just because of the size and the long life nature of this deposit. And hopefully we'll see some movement on a potential structure here for this deposit during 2024. As I said, the second large project we have, or mine, or catalyst, Escobal in Guatemala. I'm sure you heard heard me talking a lot about it. Still going through the consultation process. I think we made great advances last year. With that process, there was a change of government in Guatemala on January 14th, and got a bit of slow uptake, I think, from the new government to return to the normal meeting schedule for that consultation. So at the moment, I don't know yet when this consultation will be finalized. Of course, like always, I can't give you a timeline when the project will be back into production, but needless to say, this is the best already built silver mine in the world. Potential of production around 20 to 21 million ounces, and it's ready to go. Of course, would be ready to go when we get the go-ahead again from the government. You see there very small footprint of this operation. You see the dry stack tailings, so state-of-the-art dry stack tailing right on the right side of the photo, and a very small footprint of the entire that's the entire operation that you see here on the picture. Nearly 100% of water recycling, state-of-the-art mill and underground operations. So great asset to have. If you recall, we purchased that asset from Tahoe Resource, or we purchased Tahoe Resources in like I think we closed in 2019. And because the mine was already on care and maintenance at that point, we really paid for this asset with a CVR, a contingent value, right? So those CVRs will be replaced with Pan Am shares once we deliver the first concentrate from the site. So the de-risked, free or semi-free option on the really best silver mine in the world. And as I said, once we deliver that concentrate, we'll replace those CVRs with Pan Am shares, de-risking the project at that point, and really paying for it at that point. So that's just how the consultation is advancing. As you see, we are there like in phase 2, or the last kind of part of the consultation, the last blue part, before it goes back to the Supreme Court for verification, and hopefully green light at that point as a go-ahead to bring the mine back into production, which could happen fairly quickly once we get the go-ahead, just because the mine is obviously already open. It's on care and maintenance, but we maintain the mine in top shape, just to be ready when we're allowed to. So just a quick summary. As I said, we hold the largest silver reserve in the world on silver side. On the resource side as well, we have two very large catalysts, Escobal mine and La Colorada Skarn, both very large potential silver producers. For us, really, tier 1 silver mines. And beside that, a very strong base business, as you saw at the beginning when I showed the cash flow waterfall. Very strong business that's just ongoing, and that provides us obviously with necessary capital to advance projects like this too here. A great place to be. It's a very liquid stock, easy to trade in and out, and at a very attractive price right now. Hence, we announced the share buyback. With that, that's the end of my presentation. Thank you very much for your attention.
Thank you, firstly, for an excellent presentation. So Michael, could you tell us about your background and your journey with Pan American Silver?
Sure, happy to do so. For the people that don't know me, I'm as Michael Steinmann. I was born in Switzerland, studied geology, first a master degrees at the University of Zurich, and then a PhD in geology at ETH in Zurich as well. Both my theses, masters and PhD, were focused on work in Ecuador. I'm passionate about field work, and that's what I did. I spent a lot of time in Ecuador doing very basic geology, stratigraphy, and just providing basic geological maps for Ecuador. When I finished my studies, I moved to northern Chile for a year and a half, working in porphyry exploration, copper porphyry exploration, outside of Antofagasta. And then moved to Lima and worked for nearly 8 years, living in Lima, and working there for nearly 8 years for Glencore. Really, that was my move into production, geology first, and then production, and which I'm really passionate about. I love that part of the geology. I love the whole complexity of the mining business, and definitely it was a great school for me to be and working with Glencore and getting exposed to so many mines there. I started doing really brownfield exploration at the very beginning and then moved pretty quickly into corporate development as well. And I was looking at a lot of mines, lots of projects on the corporate development side across South America, Europe, and Asia for Glencore. In 2004, I decided to move my family to Vancouver, and I joined Pan American Silver at that point. Went through various stages there, started again with the geology and exploration, expanded then my field very quickly to business development and to other parts of our business. At that time, Pan American was, a fairly small but fastly growing company. I became president of the company in 2015 and CEO in 2016. So that's kind of the story with Pan American. I'm there now. This is my 20th year. And, it has been a very exciting journey with Pan American Silver for sure.
So then, how have you built the management team at Pan American?
So as you can imagine, with my background, I'm a strong believer of strong technical work in our business. Mining business is very complex, very complicated technically, and I think it's incredibly important to have a strong technical business. So that's kind of the core of our management team here. Of course, you need very strong financial team. You need a very strong legal team to help you through all this. But at the base, of course, you need to find the deposit and you need to find a way to mine it and recover the metal before you actually have a business. So that technical team, large part of the technical team still works with me. So there's a lot of people that are way over 10 to 20 years with the company. We have a small technical team here based in Vancouver. So we're maybe about 60, 65 people here in Vancouver. We are very decentralized business model. So that means we have in each country we are working, we have a country manager and an office there. And it's really run out of there. And we provide the necessary technical, financial, and legal support out of Vancouver, but it's decentralized. And it's decentralized and run by local people. So we have hardly any expats. We're really strong believers that this business should be run by local specialists. And of course, we find very, very strong engineers, geologists, financial specialists, and lawyers in any country we are working. And so that's how we are structured. That's how we are able to really run 11 assets in 8 different jurisdictions.
Could you summarize 2023 for Pan American, and also add if the Yamana acquisition panned out as planned?
Yeah, definitely a very, very busy year for sure. The busiest year we ever had at Pan American in 2023. As you said, we closed the Yamana transaction in March, just at the end of March of 2023, and then have been very active. We announced earlier with the transaction that we will look at divesting some of the assets. We divested Mara, sold that to Glencore, the 56% we owned there. We sold our Morococha mine in Peru. We divested Agua de la Falda, a project in Chile that we sold to Rio Tinto. And we sold quite a few of our non-controlling equity interests that we had that accumulated with the company. So in total, that resulted in cash proceeds for the company of $593 million. 3 very high quality copper and gold royalties with Glencore and Rio Tinto on very large projects. Of course, as you know, I would guess those royalties would be worth somewhere in the $150 million range right now. I'm not interested to sell them right now. I want to wait for even stronger market. And I think we're going to see, especially on the copper side, even stronger markets before we sell those royalties. But a lot of cash inflow, which really helped us to repay all our short-term debt, $398 million that we repaid on our line of credit. Just that repayment of that allows us to harvest about $25 million of savings on our interest payments per year. In addition, Mara had a high care and maintenance cost. Our piece, about $56 million a year. $14 million care and maintenance on Morococha. So if you add that up, it's $70 million of care and maintenance that we save every year. And if you add, as I said, a $25 million savings on the interest side, that's $90 to $95 million savings a year, not even including our synergies from the transaction. And when we look at synergies, and obviously that's one important reason when you look at a successful transactions, our synergies, in this case, G&A synergies have been very strong. We always guided about $40 to $60 million. And turns out that we are a little bit north of that. We're somewhere between a $60 to $70 million synergies per year from that transaction. So great transaction, pan out very well, a lot of work for the team. And last but not least, we announced just at the end of the year, on the 18th of December, the preliminary economic assessment on the Colorada Skarn, a very exciting project with a potential 17 million ounce per year silver production and a very, very large zinc and lead production on top of it. So that came in at the end of the year, but of course the technical team worked on that PEA for many years. We're drilling on that for quite a while, and so that kind of rounded off a very, very exciting and very busy year 2023.
Excellent, thank you. And then, so looking forward, could you give us an overview of how you see 2024 panning out and what your top priorities are?
Yeah, the main priorities, we will still look at a further optimization of our portfolio. That will go on kind of in the background with the business development team. But on the production side, it's really number one that we're looking at is bringing La Colorada, the vein structures on the top, back to full production. Some viewers probably know that, we suffered with some ventilation issues there for quite a few years. It just took a long time to build that shaft, that concrete lined shaft, going down about 580 meters. To provide that ventilation circuit again to the mine. The excavation is finished, the shaft is fully concrete lined, and we removed the headframe and galloway. Right now we are waiting the fans to install 2 1,000 horsepower fans on top of that to bring back La Colorada to its kind of normal production by about mid-year. So you'll see the first 2 quarters of La Colorada will still be lower production, similar than last year, and then the second 2 quarters should be at higher level production, increasing towards the end of the year. So we'll see that will result in substantial lower cost, of course, because our denominator, as we show cost per ounce, our denominator with higher production will increase. And if you're interested in the details, we show actually a quarterly guidance this year in our MD&A, just because the quarters are so different. You cannot just take the total number for the year and divide it by 4. It's a really, strong production and lower cost at the second half of the year. So that's going on with the optimization. And then, of course, the Jacobina work that we do to optimize our Jacobina asset. There's a lot of work that's going on there right now. I mean, we believe Jacobina has a lot of potential to potentially increase production in the future, but we want to spend 2024 really to optimize and an optimization study and see what kind of size we could potentially look up. And last but not least, hopefully come into an agreement with the Skarn and find, the perfect kind of mix with a partner or partners to advance that really exciting project that we have.
So you have a clear strategy for La Colorada Skarn, but what type of joint venture structure would you like to have? Would you prefer operatorship? Could you give some color to an earning structure, etc.?
Yeah, it's probably a little bit early right now. As you can imagine, when we announced that deposit, which it's obviously a very exciting silver deposit. It's producing, we produce about 17 million ounces of silver a year, but it's going to be one, if not the largest zinc mine in the world as well, and with quite a bit of lead production as well. So you can imagine that put the project right on a map for some of the largest base metal producers in the world, and those are the people I'm talking to right now, and it's probably a bit early to announce what kind of a structure it would look like. I think I made very clear that we are interested in the silver and not in all that zinc. The silver, when you look at revenue base at the Skarn, is only about 20% of revenue, so it should be fairly easy to separate somehow the metals in this project and give us access to the silver, while other groups have access to the base metals. And obviously would reduce our capital requirements for that project greatly.
So what type of companies are in discussion with regarding La Colorada Skarn? Is it just large base metal companies with focus on zinc, or what's could you add some color?
Of course. I mean, if you look at the size of the deposit, as I said, it's so big that you're going to need very large companies that are interested. Large companies are interested in long life assets. La Colorada definitely ticks that box. And when you look at the capital required to build this, about $2.8 billion, of course, that's also a capital cost that you need some large partners to be able to do that. So think about some of the largest players in the zinc market in the world that are interested, and that can be from any side. Can go all the way from producer all the way to smelting side. As zinc will be a very important metal here going forward as well, and definitely not a lot of zinc projects out there, so definitely brought La Colorada Skarn right on the map for those companies.
Well, I think with that we should turn over our focus to Escobal. So, how are the relations with the new government, especially the Minister of Energy and Mines? And what's their general attitude toward mining compared to the last administration?
Yeah, definitely kind of a slow process that we saw at the transition, right? I mean, a lot of advances on the consultation right to the end, to about probably November, December last year. The new government took over on the 14th of January, and was a slow process really to kind of a last minute appointment of the new Minister of Mines, and just a very recent appointment of the Vice Ministers of Mine, which has been in the past the person or the position that was running that consultation process with the indigenous group, the Xinca group. So slow process, slow changes. We had actually a meeting on February 21st, first meeting. But right now, it's really discussions between the indigenous group, between the Ministry of Mines and ourselves, waiting for kind of the final meeting schedule for this year, and see how fast that consultation is advancing in 2024. So, as I said, definitely a bit slowed down, but that was to be expected when you change a government. Obviously, everybody has to get back up to speed. What happened with the government before. and the progress that we made over the last couple of years in this consultation process. So kind of what I expected really, and we'll see how it advances. As I said, I never have a date. Obviously, when it's done, I don't know that neither right now, and we'll see how it advances over the next few months.
Michael, could you summarize the exploration plans for this year? I mean, roughly how many meters are you about to drill? Reserve replacement drilling, contract greenfield exploration, and also if there are any assets that look particularly promising.
Yeah, look, our exploration has always been focused on brownfield. Really, we really spent the money to replace our reserves. I can give you some numbers here. In the last 20 years, we mined about 500 million ounces of silver. That's only silver, not silver equivalent. So that's the last 20 years. Of that, we replaced 414 million ounces. So very large replacement of what we mined over the last 20 years. And I can tell you our replacement cost for exploration all in was about 70 cents per ounce. So very cheap, of course. Once you have the mine built and you replace it with new reserves every year, that's an incredible value creation, and that's what we are focused on. So we don't really spend a lot of money on greenfield exploration. We leave that with the junior market. As you know, then we purchase companies with projects if they're advanced and we are interested. So similar this year, just on the reserve replacement corporate-wide with all our operations, we are drilling somewhere in the 360 to 400 kilometers a year. So up to 400,000 meters of drilling a year. We're spending for that about $70 to $75 million. Doesn't sound a huge amount for exploration, but it's cheaper if you do it brownfield. Obviously, we are working with existing infrastructure and existing teams, and that's enough to mostly add and replace reserves and resources in many of our mines. Of course, Jacobina is a very exciting place to be. I think there's a lot of upside on the exploration side that we see coming. La Colorada always returns some really good results on the vein side. Of course, we will continue drilling at the Skarn as well, but at the moment we are more in a phase where we advance it on the technical side than making the Skarn ore bodies much bigger. Huaron is always in Peru a great mine for us to replace reserves. But in general, all the vein deposits that we have, are always very conducive to replace reserves. Of course, that's much harder to do in an open pit, just because you have a fixed pit shell that you mine, and the only way really is you would find something new in the pit, which normally pretty well what you have there. So that's not the case. So another reason why you would gain more reserves are higher metal prices, but that's always quite marginal, of course, when you move it just to reserves because of that. So really, stay focused when you look at the replacements at our vein deposits.
Could you also summarize Pan American's capital structure and financial position?
Look, at the moment, as of December 31st, we have just about 365 million shares outstanding. There's very, very few options. We are, very mature company. I think there's only 500,000 options there. We are not a junior company, so there's not, a very, very small number of options out there. Working capital of $766 million. Of course, that includes $441 million of cash. We have $750 million available on our line of credit that's undrawn. So it's a revolving sustainability-linked credit facility that we have. So that's available to us. So total liquidity of about $1.2 billion. Our debt side, $802 million about. The largest pieces to that is a $500 million bond that came over from Yamana that matures in 2031 in August with a coupon of 2.63%, so very attractive debt. And the second largest one is $283 million as well, coming over from Yamana, 4.6%. Kupang, and that one matures in December 2027.
Thank you, Steve, for being here. So could you tell us about yourself and your career?
Sure, yeah. My name is Stephen Busby. I'm the Chief Operating Officer of Pan American Silver Corp. I've been in the business for a little over 40 years now. I'm a degreed mineral processing engineer from Montana Tech in the United States. All of my career has been dedicated to precious metals mining. I started my career at sites. I was, shift supervisors, superintendents, general managers, worked my way to the corporate roles. I've had technical roles in helping companies deal with their technical issues at mine sites, and then moved into project roles where we actually designed and built mines for various companies, including Pan American. Half of my career now has been with Pan American Silver, and now I'm now the Chief Operating Officer. I'm responsible for the operations, the projects, safety, environmental, and technical services.
Thank you. So then we will move, speak about Jacobina first. So on a NAV basis, Jacobina is your by far most important asset. And you have now operated for a year, really. So what have you learned about it?
Yeah, for sure. Jacobina is our most important asset. It was the target of the Yamana acquisition. It was the crown jewel, so to speak, and what we really wanted through that acquisition. We see it as a top tier, long life gold mine with lots of potential. And if you look back at the history of Jacobina under Yamana's leadership, they doubled production since 2014, and they were coming off a pretty difficult period of economics, and the mine struggling to produce, struggling to meet its objectives. And they brought a new team in 2015 to 17 to kind of do a turnaround, and it was that team that led to this doubling of production. And so, interestingly for us, we've acquired and inherited this team, and it's an incredibly competent, well managed, enthusiastic team that now is running this operation for Pan American Silver. And what we found was we had an incredibly successful integration with this team. They really took to the decentralized operational approach that we practice here at Pan American Silver. It fit their operating style really well, where we have the financials more of a centralized approach in how we run the finances in the company, and do our reporting, our public reporting. But the operations, we'd like to decentralize and use local talents, develop local talents to run our operations in the jurisdictions that we operate in. They took very well to that. So, I think one of the things we've learned through this acquisition is we've got an incredibly competent, motivated, and dedicated team running that operation. Very happy about that. In addition, I would say we're finding Bahia, Brazil, the state of Bahia, mining friendly state. This state's focused on expanding the mining business. So it fits well with our business there in that state. In fact, we relocated our regional office into Salvador, which is the capital of Bahia, to take full advantage of the dedication that Bahia has towards mining and towards developing of mining in that state. So it's really fit well with our business and what we're trying to do in Brazil. And then we're seeing some opportunities, particularly in the mineral resource side. We think there's potential to recover more of the mineral resources with the same amount of development, if you will, that we do in mining. We see some really interesting opportunities there that we're pursuing pretty aggressively at this stage.
This year, you're investing 14 to 15 million to upgrade the processing facility at Jacobina. What parts of the processing facility are you upgrading?
Yeah, so a lot of that funding is going to go to finishing the carbon and pulp tank upgrades. We nearly completed that project at the end of 23. We had some finish up work to do in 24. We're just commissioning those tanks now. We're very happy with how that's going to stabilize our recovery, improve and stabilize our overall metallurgical recovery through the plant. we're kind of targeting to see consistently over 96% recovery through that plant, which is really good for that gold processing circuit that we have. In addition, we'll be upgrading, expanding the tailings pipeline and pumping system as we start to try to push tonnage. And as the tailings dam expands and the height increases, we have to add more pumping horsepower, if you will, to get the slurry out to the tailings facility. So we're doing some upgrades on the tailings systems. And then we're also looking at what we call a degritting system. When you're processing gold ores like the Jacobina ores, which is high quartz gold ore, as we push tonnage through the grinding circuit, we end up with what we call grit. Grit is defined as a near size quartz particle, near size to that of our carbon. So when we go into carbon and pulp, if we have quartz contaminating that carbon, that's not a good thing. So we want to put screens in the grinding circuit or upgrade the screens that are there now to pull more of that grit out and recycle it through grinding and keep it out of our carbon and pulp tanks. So that's another part of the spending that we're looking at for this year at Jacobina, in addition to advancing on our optimization studies that are underway.
You're looking to determine what's the optimal processing and mining rate, really, as well as also what mining methods are most suited for Jacobina complex. What can you tell us about the study, and when do you expect to have the results, and also potentially initiate an expansion?
Yeah, so there is it's a whole series of comprehensive studies that are underway looking at the mineral resource opportunities and how we might consider developing those into the future so that we're consistently replacing the reserves we mine. It's such a well-endowed deposit, such a well-endowed district of gold. We want to make sure that we're going to operate in a range that we can continue to replace those reserves as we're mining. And then, of course, we're looking at mining methods. This is where we're seeing some potential substantial opportunities in looking at paste backfills. Paste backfill would allow us to recover more of the resource. If you look at Jacobina, a really interesting number to look at is our M&I resources. We've got 4.7 million ounces of gold in M&I resources, 94 million tons at 1.55 grams. But quite a bit of that is at or above even our reserve grade. Reserves, we have only 3.1 million ounces at about 2.02 gram per ton. So what this additional paste fill would allow us to take the same development you're using, and a lot of what we're having to leave behind without paste fill, we can mine with that same development. So there's a cost to paste backfill, but there's a benefit in that the development gets you more ore tons. So on a unit basis, we're hopeful, we're optimistic that we're going to see some substantial benefits, and that may lead us to higher production rates. That part we don't know yet. We're still looking at that in detail, along with, the total processing evaluation, the power supply, our environmental impact. As we grow, how is that impact managed? Can we manage that impact, and the social impact, and of course the labor? Is there capable labor and workforce that we can bring on site to run at an expanded rate? Those are all the studies that are underway. We're going to be heavy throughout this year on those studies. Our current feeling is we'll bring those studies to culmination early part of 2025. And then that will tell us, is there an expansion to play at Jacobina or not? So that's really what we're focused on during 2024 on these optimization studies.
Would you like to, this is of course very, very, very difficult now, but would you like to give us based on what you know now, a ballpark interval of what you think is the optimal, or what could be the optimal, where it should land optimal processing and mining rate?
Yeah, I really don't want to speculate on that quite yet. Right now, we're focused on stabilizing production and recoveries at this kind of 8,500 tons per day that we're currently at. We got a few things like the degrading circuit and the grinding circuit that we have to upgrade a little bit. So we want to see how that plays out and let these optimization studies kind of lead us to that throughput, that optimum throughput thereafter. I don't really want to speculate on what that's going to be. I think it's too early. We're still trying to get a feel for how the mineral resources are going to be mined and how they're going to get scheduled into the future. Until we kind of have that, we won't have a prediction of what the throughput increase might be.
And so there is in the region there is high employment competition. So how are you addressing this in order to curb wage inflation?
Yeah, there certainly is. We're seeing a lot of competition. As I mentioned, Bahia State is growing in terms of its mining business. We see mining expansions and developments happening throughout the state. The site currently has a well-established operational excellence program, and that program is designed to incentivize individuals and the various teams at the site to maximize efficiencies and lower costs in this constant pursuit of continuous improvement. It's a really well-polished team looking at operational excellence every day of the week. And we're seeing some real beneficial projects that they've discovered over the last 7 years, and we hope to expand upon those projects. But they implemented a mine dispatch system that improved logistics, it improved utilization of the truck haulage fleet to get the ore out of the mine to the process plant. That's really helped to reduce the load on that haulage. It helped to streamline that haulage to where we don't need quite as much workforce to do that. So some of these programs are aimed at reducing the number of people we need so that we can continue to pay competitive salaries, which is incredibly important to us. We need to remain competitive in the region to run this mine as efficiently as we can. We've also implemented a number of tracking systems, both for the mine equipment and for the personnel that are underground. And that allows us to kind of optimize use of the equipment and personnel. We're seeing some benefits from that. And as we learn and as we monitor what's happening, we can enhance the efficiencies of that mine and how people perform in that mine. Again, utilizing the resources that we have to their fullest extent. That's really the objective of a lot of these programs. So we're aggressively pursuing additional operational excellence programs this year, and that's what we're doing to basically combat this high wage inflation that we're seeing in the jurisdiction.
Could you summarize this year's plan for El Peñón? Production, capital spending, other work that you will be performing, etc.
Sure. Yeah, we're aiming to produce between 120 to 135,000 ounces of gold. And along with that, another 3.6 to 3.9 million ounces of silver this year at El Peñón. We think our AISC will come in between $1,200 to $1,300 per ounce. This is pretty comparable to what we saw last year. Last year, we made 96,000 ounces of gold and 2.9 million ounces of silver over the 9 months that we controlled the asset. So we're pretty much at steady state operation, I call it, and we're pretty much delivering according to those plans. Our real focus this year, we plan to spend about $30 to $32 million of sustaining capital. Half of that is dedicated to extensive infill and step-out exploration drilling. And that drilling is focused on improving reserve reconciliations in the high-grade zones. We experienced some shortfalls in these high-grade zones during 2023, and so we put an effort into drilling tighter space drill holes through the high-grade zone areas, and that'll lead us to better scheduling, better prediction of production results from that mine going forward. So that program's well underway already this year. We're seeing some really interesting results, really good results in some areas. So, half of what we're spending is really focused on that. The other half is dedicated to underground development advances in certain areas, as well as mine equipment overhauls and replacements. And we also have some lease payments that go into sustaining capital that make up that whole total $30 to $32 million that we're anticipating to spend.
So La Colorada, production is guided significantly up compared to last year, as you know, you're resolving your ventilation issues. But so could you add some color on how you're resolving these issues and when do you expect them to be fully resolved?
Yeah, I mean, at La Colorada, it's all about delivering our adequate ventilation to the underground operation. We've got poor ground conditions, and we found over the years that, you know, the common $3 to $5 million investment in raise bores, typically used for underground ventilation infrastructure in our industry, just isn't working at La Colorada given the heat and the humidity and the ground conditions that we face. We're unable to support those raise bores. They fail over time as we're pushing hot, moist air up through those raise bores. So we decided back in 2021, the real solution to these problems is to excavate a blind 600-meter deep, 5.5-meter diameter shaft dedicated solely to ventilation exhaust. And the idea is the shaft is located directly over our high-grade zone that we think is the source of this heat and this humidity that we're having to pump through the mine now to exhaust through some raise bores that are further away in the western side of the mine. So we end up heating the entire mine, and all of our ground support systems in this weak volcanic rock tend to fail as it gets exposed to this heat and this humid condition. So with this concrete lined shaft, we'll be able to bring refrigerated air down through the mine and to the high-grade zones to allow us to mine those high-grade zones at higher throughputs. And then that hot, moist air that's there will go directly up the shaft and not back through the mine. So it's going to provide significant benefits and bring us back to a normal operating range at La Colorada, which is around that 2,000 tons per day throughput rate. So right now we're on schedule. We had forecasted about $65 million to build this shaft and the ventilation system on the surface, the two big vent fans that go with the shaft. We're on budget to spend that money. We're on schedule that we produced back in 2021 to have that project operational by mid this year, 2024. We're on budget, on schedule for that, so that will happen. Once that's up and operating, we'll start to advance our development rates to open up the ore in that high-grade zone. And you'll see us slowly ramp up from we'll call it 1,400 tons a day is kind of what we're running right now for the mine throughput. That'll slowly ramp up to 2,000 tons per day between July and December once that ventilation shaft is fully operational. So by December, we'll be back to the plus 2,000 tons per day rates. And this is the critical project that's going to get us there. And things are going really well on that project. We did complete that excavation on schedule at the end of last year in December. That project went incredibly safe and efficient. We're very pleased with that shaft. It's fully cement lined. We're now stripping all the headgear, the head frame, the hoist, all the associated gear that we needed to build that shaft. That's all getting stripped away so that we can put the big ventilation fans and all the ducting for those fans on the surface so that we can fire up one of the two fans towards mid-year this year.
Okay, so really from Q4 or in Q4, it should be back up to a little over around 2,000 ton per day.
By the end of Q4, we expect to see 2,000 ton a day plus consistently from that point forward.
How much do you expect the grades, both silver but also lead and zinc, to change as you access sort of Candelaria and other higher grade zones?
Yeah, so if you look at our reserve grade is just shy of 300 gram per ton. So once we're up and running at that 2,000 plus tons per day, we hope to mine right at near reserve grade. That's kind of what we're targeting.
Well, then we should actually move down to La Colorada Skarn. Could you describe the La Colorada Skarn project? Mining, the deposit, processing, metallurgy, in what work you have to do to actually be able to mine, etc.
Absolutely, yeah. Arguably, our La Colorada Skarn project is one of, if not the largest undeveloped silver zinc project in the world today. It's an incredibly exciting project. We issued the results of an extensive preliminary economic assessment study at the end of 2023, and that study has generated a lot of excitement in the industry. given the scale and the value this deposit can bring us. The mineral resources grew considerably since our original brownfield discovery in 2018. And we've spent several years evaluating different mining methods on how to best exploit the deposit. And just given the sheer size and the depth of this deposit, we've outlined 3 distinct ore bodies right now. They're quite large. In some cases, the general footprint of these ore bodies is 600 meters by 400 meters, and they extend to a depth of about 1,000 meters. They start about 800 meters below surface, and they extend to almost 2,000 meters. They're still open-ended. They're still growing in size as well. So, we kind of, in the preliminary economic assessment, looked at those 3 ore bodies and started to evaluate different mining methods and how we could best exploit that. And what became clear was the footprint, and given the ground conditions, this sublevel cave mining method, which is becoming a lot more common in our industry. Particularly, you see it in Australia. There's a lot of sublevel cave mines that are incredibly efficient. We started to bring experts in to help us consider a sublevel cave mine for these large deposits. They're ideally suited for this kind of mining method. And what we discovered is we could potentially develop a 6-year development program that would lead us to a large 55,000 ton per day sublevel cave mine that could be accessed by twin ramps. And these ramps one of the ramps would be equipped with an underground crushing and conveying system that would extract the ore from the deep underground all the way to the surface, where we'd build a processing plant. This type of mining, this sublevel caving and this crushing and conveying out of the mine, allows us to potentially electrify the entire mine. You can go to battery operated equipment. Battery operated equipment today struggles with hauling material uphill. So with this kind of mining, everything's done on a level. All the mining, all the drilling, the blasting, the loading, the hauling is all done on a level basis. And you dump the ore into these chutes, and the chutes drop it down into a crushing location. The crusher crushes it, puts it on an electric conveyor system, and that conveys it out of the mine. So again, you can go to a total electric mine. We're really excited about that opportunity. On the surface, and then in addition to the ramps, we would have 2 large 10-meter diameter by about 1,100 meter deep ventilation shafts. So one shaft would be air inlet, one would be air outlet. Again, they'd be cement lined. As we've learned through the vein mining, the necessity to have a cement lined ventilation shafts. So the 2 shafts would service the entire life of mine for this sublevel cave. Pretty interesting approach, pretty straightforward when you look at it. On the surface, we've done some extensive metallurgical testing on samples collected from our exploration drilling, and determined that it's a conventional selective lead zinc flotation circuit, very similar to the one sulfide circuit we run for the vein ores today, just much larger in scale. It'd be 55,000 tons per day to meet the needs of mining these 3 ore zones simultaneously. To give you a sense of the magnitude, I mean, we estimate this project, once built, could produce over 17 million ounces of silver a year, 427,000 tons of zinc, and 218,000 tons of lead for the first 10 years of its mine life. And we estimate today, with today's knowledge, of a 17-year mine life. Again, it's growing. It's going to grow beyond that. We further estimate that this project can deliver about a $1.6 billion net present value with a 14% rate of return, paying its capital back $2.8 billion capital estimate in a little over 4 years once it's constructed. Interestingly, when we stack this project up and we rank it with other projects in the world, even operations today, we see this delivering into the lowest quartile operating costs against the largest zinc producers that exist today. So a very exciting project for us.
So you're spending 25 million on the project this year. Could you outline the work that you will be performing?
Yeah, so a lot of that spending this year is directed towards continuing the infill and the step out drilling. that we're doing on the deposit. Again, those deposits are growing. We kind of need to know the extents of the deposit to properly design the cave mining systems that we're looking at. We're also doing, excuse me, a number of geotechnical holes above the ore bodies to truly understand the caveability of that material. So far, when we plot up the caveability of the rock condition associated with the large footprints that we have, we see the caveability factors that are generated for this project one of the best in the world. It's just such a large magnitude with such weak rock above it. Again, it's just ideally suited for that. We want to extend those studies, make sure we understand that caveability incredibly well as we move this project forward. We're also doing some work around the hydrology, the water. You know, we'll have to dewater these deposits, and how best we do that. We're doing some dewatering work. And then we're also looking at alternative ways of logistically handling the concentrates. There is some rail options available to us. So we're thinking that we might consider a rail option for transporting concentrates to the smelter and to the ports, which would really bring some economic benefits that we see over the life of this project. So that's really where that money's going this year.
So could you summarize this year's plan for Cerro Moro? Production, capital spending, other work, etc.
Sure, yeah. We're intending to run right at the 1,100 tons per day throughput, same as we did in 2023. Again, it's kind of in steady state. However, the silver and gold grades will be lower. We're looking at going from 405 gram per ton silver in 2023 to somewhere around 275 to 285 gram per ton in 24. And on the gold, we ran 8.9 gram per ton during 2023. We're looking at 8.5 to 8.7 gram per ton in 2024. That's all on account of in 23, we mined out the highest silver grade deposit called Zoe. We mined through the highest grade portion of that during 23. So it brings us back closer to the reserve grade that we have remaining. We aim to produce 93 to 115,000 ounces of gold and 3.2 to 3.5 million ounces of silver in 2023 at an East Coast cost of around $8 to $11.50 per ounce of silver payable produced in 2024, excuse me. We forecast about $14 to $15.5 million of sustaining capital investment. That's inclusive about $5 million in exploration. We do see some opportunities. We want to look at how we can expand the life of that operation. We've got another $6 million in developing a whole road and opening a new mine area. It's a satellite mine area called Nadi. That's about 24 kilometers away from our plant site. So we got money in to develop that mine. That's really what makes up the majority of that capital spending this year.
Your reserve is decreasing, and the grade profile, as you mentioned, is also decreasing because you mined out your highest grade deposit. Would you say that the mine is in harvest mode, or how are you thinking?
Well, our thinking is we're going to be aggressive this year on the exploration program, step out drilling, brownfield exploration, to try to extend the life of the operation. We need to find some extensions to the resources we have. We think there's good opportunity to do that. So that's really what we're focused on during 2024.
So you will be spending, the capital spending for this year will be large, 76 to 80 million on capex, of course. So could you outline the capital spending?
Sure, yeah. In 2024, as you mentioned, we're estimating 76 to 80 million dollars of sustaining capital. The vast majority of that, 60 to 65 million, is being spent between leach pad expansions and waste dumps for sustaining our production into the future. Leach pad spending will continue year over year. About half of that, 60 to 65, is leach pads. The other half is for waste dumps. On the leach pads, that spending will continue for the foreseeable future. However, on the waste dumps, that expansion will probably get us into a 3 to 5 year cycle before we're building additional waste dump capacity. We have another about $10 million for mine equipment overhauls and replacements. and then the rest makes up exploration, some land acquisitions. We got a shop construction that we're building on site, and some camp upgrades that make up the rest.
Thank you. And then, yeah, the production is lower due to mine sequencing. What gold grades are you forecasting, and also how do you see that changing next year?
Yeah, actually, we're considering about steady state operation here. We stacked about 12.5 million tons in 23 at a grade of just under 0.5, 0.48 gram per ton. We expect similar rates during 2024. We're aiming to produce 122 to 144,000 ounces of gold with a East Coast cost between 1550 and 1650 per ounce, and that higher East Coast is really reflecting that additional leach pad and waste dump expansion that we're going through. It's a heavy year for that during 2024.
Perfect. But yeah, so it's a very capital intensive year this year. What do you
Yes.
expect post this year? What do you expect the normalized sort of sustaining or capex requirement to be?
Yeah, so as I mentioned, about half of the 60 to 65 million dollars is in waste dump. That's going to be on a 3 to 5 year cycle. So when you look at 2025, you can probably take 30 to 32 million dollars off of that from what we're spending in 2024. And then it'll probably be 27 to 29 before you see another big spend like we have this year.
Super. And even then, it will probably be lower, at least on a real basis, as you have as the heap leach expansion is finished. So
Yeah.
then, Timmins, your only operation outside Latin America. What measures are you taking to reduce costs at Timmins?
Yeah, Timmins, we're really focused on exploring some nearer surface opportunities we see there. We aim to find ores that we can mine at lower costs. As we get deeper on both the Timmins West and the Bell Creek operation, those are where our costs start to grow. So we're trying to find some lateral extensions. We're seeing some good opportunities in doing that. We think that'll lead over the medium term into lowering operating costs at that mine. And then in addition, we're also looking to optimize our haulage from Timmins West to Bell Creek. All of our processing is done at Bell Creek. Timmins West is a satellite mine. It's about 50 kilometers away. We see an opportunity through some land acquisitions to shorten that haulage route up, which will also lead to some significant cost savings. And it'll also give us access to some very important fill materials that we need for our tailings dam expansions, which also reduces our costs for those. So those are some of the initiatives we have underway that we think have good opportunities to reduce cost into the future at Timmins.
Would you like to quantify how material they could be? On an all-in sustaining cost basis.
Yeah, we don't. Like I say, we don't have those exploration opportunities defined yet to know exactly what they look like and how they'd be mined. So I'd really be speculating heavily to try to guess where those would come. The haulage, we think there could be as much as $2 to $5 a ton savings if we can secure a shorter haulage route into the site. And that we could also see some significant savings in the tailings dam expansions, in the neighborhood of $5 million a year savings there.
Then it's just the Dolores left. You have more mines, but it's the last mine that we will be discussing. So could you summarize these plans for Dolores?
Sure. We expect to complete our mining of our reserve sometime around mid-year, a little bit later this year in 24. That'll be it on the reserves. We'll exhaust all the reserves that mine had to offer, and we'll initiate what we call trickle-down leaching thereafter. So the second half of the year, we won't be putting fresh ore on the heap. We'll just be producing off the inventory that's built on those heaps over the years that thing is operated. So we aim to produce about 65 to 75,000 ounces of gold and about 1.9 to 2.2 million ounces of silver at an East Coast cost between $12.75 and $13.75 per ounce of payable gold during 24. And that's inclusive, I should say, of a significant non-cash inventory drawdown cost. as we trickle down and pull ounces out of inventory, we do have some costs associated with that have already been spent, but they'll hit our books as a cost coming out, a cash cost coming out during trickle down. It's not truly cash, but there'll be some costs on that. Sustaining capital wise, we're past all the sustaining capital. We only have a modest kind of $500,000 of some programs we're spending this year. Very little sustaining capital there.
What production profile do you expect post 2024 with residual leaching?
Yeah, so residual leaching, it's commonly done in heap leaching in our industry, and it's very interesting to see how heaps have kind of expired after mining ceases. And what you'll find is there's a very slow decaying curve of production, if you will. And how long that decaying curve continues to last really depends on our ability to reduce kind of the fixed cost of operation during that trickle down period so that we can maintain positive economics through that trickle down. Currently, we estimate it'll extend beyond 5 years. And that's very, very typical you see in the industry. But we think, again, if we can reduce costs, we may be able to substantially extend that timeline as well.
How much do you think production would have declined by then?
Yeah, I mean, I think it'll be substantially less. Fresh ore definitely gives you the better recovery for your buck. So, I would suspect you'll be seeing up to 30 to 40, 50% lower production moving into 2025.
And then, we'll move to strategy and vision. So you instituted a share buyback program, which gives you the possibility to buy up to 5% of your outstanding shares. How are you intending to use your NCIB?
Look, we will be very opportunistic with this. For me, buying back your stock should be an accretive transaction like any other transaction you do in business. So you don't just buy that back because you sit on a lot of cash or whatever. You need to have a solid model. You need to be sure that your business is not fully valued at this point in the market. I think that's quite an easy one at this point in the market when you look at precious metal stocks, which most of them trade at very low values compared to the metal price. Not enough interest on the investment side. So you see that most precious metals companies trading at a discount to NAV, and that's at that point it makes obviously a lot of sense to buy back your shares if you have the cash. So this is an interesting situation where you actually have strong metal prices. We have a very strong balance sheet. At the same time, you have quite low valuation or very low valuation of precious metal stocks. So it's a great opportunity to buy back shares. We normally don't do that, but as I said, this is an opportunistic approach and a creative transaction for us to buy back our shares. And we are in the market as we speak right now, and they're buying actively back.
You participated last fall in the New Pacific's financing for $10 million US. So which increased your marginally increased your ownership to 11.6% of the company. How are you thinking about the investment in New Pacific?
New Pacific has some very interesting projects in Bolivia. We are in Bolivia active since '95, so we know the jurisdiction very well. Our San Vicente mine is doing exceedingly well in Bolivia, and I like the opportunities in Bolivia. It has been a stable and good jurisdiction for us in the past. Looking at New Pacific, we financed or helped financing some of the first rounds of drilling a few years ago, and you're right, we just marginally really increased our participation to 11.6% with the last financing, just to make sure that there's enough money in the company to really kind of make the last decision here. Some more rounds of drilling, metallurgical work, etc., on the two exciting projects they have there to see if they would be big enough and of the quality that for Pan American to actually move forward on them. That's really always the idea. We're not investing in companies for investment purpose in that sense. We're investing it really because we think there is a potential to have a project that goes forward and at that point we could, we could take on larger part or the entire company and then proceed with building that mine. That's really kind of the idea behind our investment. So we're not just investing in to buy and sell and trade shares. That's not our business. But the idea is really to see and be there and help to finance projects like those two projects that New Pacific has in Bolivia.
You divested a number of assets last year, most notably Moro. How are you thinking in terms of portfolio management? Are you further considering divesting marginal assets? Could you add some color to that?
Yeah, definitely. Look, I think we did some great strides last year by divesting three assets and some other investments, and we'll definitely continue to do that. The idea is always to, focusing on the best assets, optimize your portfolio, kind of have a turnover and increase over time the quality even further of your asset portfolio. That's kind of the idea here, and we'll continue to do so. So you will probably see us continue with that story, divesting assets this year. Although, the biggest ones, for sure, Mara was the biggest one. We don't have anything of that kind of size to sell, but you hopefully will see a few, smaller size transactions in 2024 as well.
Excellent. And then on the other hand, how active are you looking for new, acquisition opportunities? Because you have ample of liquidity.
We're always looking the same around. I think, people often ask me, is it a good time to buy or is it a good time to sell, etc. And you know what? If you find a high quality project and you can buy it at the right price, it's always a good time. It's very difficult to find high quality assets with large exploration potential. So, and if you find a way to structure an accretive transaction, and with Yamana, we have been able, because we split Yamana up between Agnico and ourselves, and that allowed us to purchase the South American assets in an accretive transaction. If you're able to do that, then that's always a good time to do so. And that's we follow that every year. So our business development team is always looking for opportunities continuously. You have to turn a lot of rocks and a lot of projects to find those gems and the really good ones. But once you find them, we definitely look at them. And if there's an opportunity, then having a really, really strong balance sheet, of course, helps us to react. We had a strong balance sheet before Yamana. We had no debt before the Yamana transaction, and that helped us, go in quickly there and break up that transaction that Yamana had kind of envisioned with Goldfields, and as I said, come in together with Agnico and put, I think, those assets in much stronger hands. But it's really that strong balance sheet, and we still even have a stronger balance sheet now. And if we see that opportunity, and if it's an accretive transaction, then for sure we will react to it.
My penultimate question is: so you have assets in many countries in Latin America. What jurisdictions are you seeing deteriorating and which are improving currently?
Yeah, look, I mean, Latin America, of course, countries go normally through kind of a cycle, and it's often related to the elections. Actually, we start seeing that in many other countries in the world right now as well, right? That elections are very, very big events and have a big impact in countries, and definitely in South America, where we often have moves between, more I would call more right or business-friendly governments to more left, and then back and forth. And we see that in many places. We've seen that in Argentina, of course. We've seen it the other way around in Brazil or in Chile. So that's just normal cycles. That's why we are so diversified in different countries. Those election cycles happen at different times. But in general, the noise is always much bigger than actually reality. So at the end of the day, each government has to provide, obviously, for its citizens, has to provide projects, has to make sure that there's healthcare, education, etc. available there. Mining provides great returns for many of the countries with great jobs and tax revenues. So at the end of the day, as I said, that election noise is way bigger around the election activity than actually turns out to be in the future. But right now, I'm really excited about Brazil. Brazil is a great place to be, but Chile, Peru had some problems the last year or 2 years. I think it's calming down now, but definitely there was some disruption there. Mexico will go to an election this year, so we'll see how that turns out later on this year. And then in Argentina, I think Mr. Milei is trying to put the country back on track, I think, and that's a process that takes quite a long time. So it's not going to be done in a few months, but pretty excited to see that advancing as well. So I wouldn't call it deteriorating or improving. It's just changing, and those cycles going through, and I'm living and working in Latin America all my career, and so it's a large part of my team. So we are used to that and know how to react to it.
Thank you. Well then, so my final question, which is, where do you envision Pan American Silver in 3 years?
Well, look, I think in short, it will be stronger, it will be even better, and it will be bigger. I think that's where it's going. I'm a firm believer that we need stronger and bigger mining companies. There's larger investors who want to invest in companies, and they need size, they need liquidity. That's what we can provide right now, but we can bring that even further and provide more of size and liquidity to even larger investors. I think you have to, as I said, to continually improve your assets and see what else is around there and increase the quality of the assets. And so when we look at the next few years, we just continue to play this and try to add higher quality assets, even higher qualities than we already have, and grow our business further. It most likely will be in similar jurisdictions we're working already in. It's called Pan American. I don't think so that we're gonna venture to time zones like 8, 9, 10 hours away from where we're working right now. That makes our business way too complicated. But really stay in the areas that we very well know. As we said, that is very important to understand the countries you're working in, the cultures you're working in. And, we are one of the largest precious metal producer in Latin America, and that's probably where we continue to grow.